Assalamu alaikum everyone. Today we are going to talk about part 4 of the topic of double keep and try, in another word, recording basic transactions. I mentioned in this diagram about part 1, part 2 and part 3 of this topic briefly. So in part 1, part 2 and part 3 we talked about purchase, expense, asset, revenue, liability, shareholders equity or equity, debit, credit when they increase, decrease, but we haven't tried it on practice yet. In this video we are going to use them in practice. We are going to see how can we use them, why we have learned it. So let's get into it. Our first example is about cash and rent. Let's read. Jack paid $80 for rent by cash. From here, we can see that we have rent and cash. It is double side effect. For rent, what is rent actually from this diagram? Rent is considered as expense. And in here, our expense is increasing. And in increase in expense should be written on the debit side. And the second effect of this transaction is cash. As I mentioned in previous videos, cash is included in the asset as current asset. So our cash is decreasing because we paid cash. Now we have less cash. That's why it is included in the credit side of this transaction. So we have made like transaction for the first example. Well, second example, if we take a look at the second example, Jane sold goods for $90 in cash. In here we have double side effect on sold goods, which means sales and cash. Well, sales is, in another word, revenue. And we are selling goods, so we have more sales, but when there is increase in the sales, in another word, revenue, we have write it on the credit side. Let's write it. And in our other effect is cash. As we mentioned above, cash is included in the asset, and now we have increase in asset, which means it should be written on the debit side. Cash. If we think logically, when we sell things, our cash will be increased. Our third example is about Lily purchased goods for $50 in cash. We have double effect on cash and purchase. If we take a look at this diagram, purchase, when there is increase in purchase, it should be debit. So let's write it on the debit side. On debit, it is purchase 50, and on the credit side, again cash, because we bought goods. We have more purchase, more goods, but we have less cash. Cash 50. And the next, well, let's take a look at the example 4. Shan sold goods for cash, receiving $180. On debit side, he sold goods, right? So when we sell goods, we have more cash. So write it on the debit side. On the cash, it is debit side, and on the credit side it is sales, because our sales is increasing, but sales is right here. When there is increase in sales, so it should be credit. So we have written all of these transactions, but guys, you may wonder why we have done all of these transactions, why we need it. Well, we need these transactions for preparing ledger accounts. So what is ledger accounts? So we have to categorize each component we have right here. Let's say expense, cash, or like the purchase. Let's start with the cash. Let's open the cash account right here. Well, what is ledger account? We have to categorize them as I mentioned, and we have to have on this side debit and on this side credit. In simple words, we have to write them. Let's take a look. Here we have cash and on credit side. So let's write it on the credit side. And here we have cash but on debit side. So what's wrong with that? Let's write it on the debit side. Here again we have cash on the credit side. So let's write it on the credit side. It's 50. So here we have cash on the debit side. So let's write it in the debit side. And this is the thing called ledger account. But we have to finish it. So here we have to calculate the sum. It's 160. And in here we have to calculate the sum and it's 130. And which side is larger, this or this? Yes, you are right. This side is larger. That's why, but in ledger account, both sides should be balanced. They should be the same. So making this side 160, we will be needed 30. And this 30 is called carried forward. In another words, closing balance. So we are going to close it and both of them will be 160 and 160. So this is called ledger account. So let's open ledger account for expense as well. On here debit, on here credit. So we have only one expense, it is 80 and it is on the debit side. So let's write it on the debit side. We don't have anything on the credit side, so we have to give closing balance of 80 right here, and both of them will be 80. 80 and 80. And the next one is purchase. Let's open purchase account. Right here it is debit and right here credit. Here we have on the purchase only one purchase, which is 50 on debit side. So write it in the debit side. So closing balance 50 and we have here 50. And we have sales. Let's open sales account. Here on credit side 180. And here on debit, again credit side, it is 90. So that would be 270 as closing balance, which means carried forward we have to write 270. And overall would be 270, 270. So what we are going to do next will be working with this ledger accounts. It may seem a little bit confused right now, but believe me, like everything will be fine as long as you follow me and you watch the videos that I am publishing. So this was ledger accounts. Why we need it? Because for making trial balance, and in further levels we are going to learn about making trial balance. For now you have to do more and more practice about this double keep and try, where you have to write cash, sales, purchase, and etc. So that's why let's do one more activity, one more examples for this debit credit sides. So sold goods for cash for $90. Sold goods, as name suggests, it is sales, and cash, as name suggests, it is cash. But which one is credit and debit? Cash is being increased, that's why it is debit, and sales is also being increased, but it is credit. Why? Because right here on revenue, when there is increase, it should be credit. And then paid insurance premium by check, $30. Insurance premium is part of the expense, so we have to write expense right here, which is $30, and by check means by cash. Cash and check, $30. Right here, which one we should debit and credit? Our cash is being decreased, so which means credit, and our expense is being increased, which means debit. And the next one is sold goods for credit for 250. As I mentioned in part 3 of this video, when we sell something for credit, it will be receivable for us instead of cash. So receivable 250 and sales 200. Receivable is part of our asset, so the next one is paid $80 petrol for delivery van. Petrol seems like one-time cost, so that's why we can call it expense. And we are paying it for expense with the cash, so we have cash component on another side. So which one should be debit and credit? On debit side it is expense, because expense is being increased. On credit side it is cash, because we paid cash. Next one is about 200, about goods for $200 on credit for resale. No matter it is for resale or not, it is purchase. So purchase, and then if we buy something, so it is on credit, so it should be payable. As I mentioned in the part 3 of this video, if we buy something for credit, it should be payable. So it is debit and it is credit, guys. Yeah. And bought goods for $100 for cash. Right here it is for cash, so we can write cash on the credit side, not payable. And bought goods means on debit it is purchase. 100 and again 100. $70 in cash withdrawn from bank for petty cash. Withdrawn, what this actually means is when owner took money from the budget of the company. It is called withdrawn. Petty cash is when like the small amounts are recorded in the book. We will be talking about it later. So petty cash is being increased and this withdrawn, which means owner's cash right now, is being decreased. That's why on debit side it is petty cash and on the credit side it is withdrawn or cash, or we can say even bank. Well, thank you for watching.